Welcome to UAN Payroll 101, Level 4. In Level 4, we will be discussing some helpful hints for payroll because we're ready to process our payroll. We're going to talk about withholding payments and reports after processing payroll. We will look at where the withholding payment amounts come from, and we'll look at required quarterly reporting, practical payroll. So, all of this theoretical payroll stuff is great. My head is spinning right now, and I'm wondering what order do I do things in, how do I catch mistakes before they happen, and what withholding reports are due to whom and when. Well, don't worry, that's what we're about to discuss. Well, let's pretend that all of our employees are set up in the UAN software and we're ready to do payroll. The Wages screen creates wage information for specified employees. The wage information recorded is based on the earnings and withholdings assigned to each employee under the employee setup area. Those were the things we talked about in Level 3. Comp time, holiday, personal, sick, vacation, and other leaves are updated each wage according to the leave accrual and proration information established for the specified employee leave. Overtime earnings and non-cash benefits are also added to wages based on the information attached to the earnings under the employee area. So you can see that the employee setup is quite important. But here are some helpful hints to make payroll run smoothly. This is part of the Add Wage screen. It's the frequency area where all frequencies will be listed for your entity. So remember, when you're adding wages in UAN, verify the pay period dates for the wages to be added. These dates are critical for accuracy of withholding rates and reports. Using the departments box and frequency box correctly helps to limit the employees that appear in the employee earnings box and can save the fiscal officer time when recording wages. For example, when it's time to record wages for the Planning and Zoning Commission board members who are only paid monthly, it is best to select only the zoning department and monthly pay frequency because this limits the employees appearing in the employee earning box to just the board members you want to pay. If we had selected all departments and all frequencies, we would have to manually search through all of the employees of the entity and check only the Planning and Zoning Commission board members to add wages for. Be sure to deactivate any earnings that are not currently being used for each employee. The employee David Metzger has 2 earnings appearing in the employee earnings box for add wages. He's currently not being paid for the first earning, Parks Director, Parks Department salary. This earning is still an active earning in Mr. Metzger's employee setup, and that is why the earning is still appearing to add a wage. The fiscal officer should deactivate any earnings that are not currently being paid so that the earnings does not appear to add to a wage. Batch wage reports. Another helpful hint is to run batch reports for wages before you post them. These reports can be found in Payroll, Reports and Statements, Batch Report, and you can see there's many different reports you can look at. And by reviewing them prior to posting a payroll, you can often find and fix mistakes before they become more difficult to fix. There are a few more helpful hints for you to look at later in the Payroll 101 document. Withholding payments. You've successfully run your first payroll. In theory, of course. Congratulations! Now it's time to print withholding payments and any reports that are required with the payment. We are going to look at several common withholding payments and any reporting that is required with the payment. We will look at each withholding in detail. what needs to be done on a per payroll basis, monthly basis, and quarterly basis, if applicable. Vendor payees for withholdings. All withholdings require a payee. There are 6 UAN preset payees for payroll withholdings. They are federal tax payee, and this includes federal tax, supplemental federal tax, Social Security, and Medicare. Ohio Bureau of Workers' Compensation, Ohio Department of Job and Family Services, Ohio Public Employees Retirement System, Ohio Police and Fire Pension Fund, and state tax payee, which includes state tax and supplemental state tax. These vendor payees should not be added again, as the system automatically associates the preset payees with their corresponding withholdings and tax reports. They can be edited to update the name and/or address to what should print on the check or voucher. Payees are set up in general, maintenance, vendor payees in the UAN system. Be sure to indicate on a new vendor if it is a payroll withholding payee. If a payment might also be generated in accounting for current unpaid withholdings or for an additional employer's share, such as for health insurance, then you should also mark the payee available for accounting purchases. One vendor payee may be used by multiple withholdings. A common example of this is school district income taxes. When your employees live in different school districts with taxes, a withholding will be set up for each different school tax, but they will share the same vendor payee, Ohio School District Income Tax. The software will generate a school tax report that shows the breakdown of the payment between the districts for reporting purposes. As long as you set up the school districts as separate withholdings using the same vendor payee, the software will properly track this information for monthly, quarterly, and W-2 reporting. All payroll withholding vendors must have an employer account entered in account number 1 on the vendor payee screen. OPERS and OP&FPF payees must have their ID in account number 1, and for OPERS L in account number 2, entered without any dashes, since the program will automatically provide dashes in the printing of the reports. Only the preset vendor payee names can be edited. New vendor payee names cannot be edited after they have been used. Before you click Save, verify the correct spelling of the vendor payee name. Addresses and other entries in the vendor payee form can be modified as necessary. Federal tax payments. The federal tax payment is the most common and most frequent withholding payment. And as you can see by the individual on the screen, the federal tax is not very well liked. Well, a government entity that has employees needs to be familiar with the basic responsibilities and requirements applicable to all employers, as well as some provisions that are unique to governments. All entities that employ workers are subject to federal employment taxes on wages. The IRS identifies individual taxpayers by using taxpayer identification numbers, or TINs. For individuals, the TIN is their Social Security number. State and local entities use employer identification numbers, EINs, assigned by IRS to identify their accounts and tax returns. The EIN should be used on all employment tax returns, such as the quarterly 941 form, information returns such as Form W-2, and all correspondence with the IRS. Depositing federal taxes. Federal taxes are required to be deposited using the Electronic Federal Tax Payment System, or EFTPS. Payment and paper coupons can no longer be presented at the entity's bank. IRS Publication 966 explains the EFTPS system. When does the entity need to deposit? The entity will use either the monthly or the semi-weekly schedule for deposit of federal employment taxes. These schedules indicate when a deposit is due after a tax liability arises. That would be payroll pay date. Before the beginning of each calendar year, employers must determine which of the two deposit schedules they are required to use. The deposit schedule used is based on the total tax liability reported on Form 941 during a 4-quarter look-back period. The deposit schedule is not determined by how often employees are paid. Federal look-back period. The deposit schedule an employer must use for a calendar year, again, is determined from the total taxes reported on the 941 in a 4-quarter look-back period that applies to that year. The look-back period begins July 1st of the second preceding year and ends June 30th of the preceding year. So let's look at this a little bit closer. If the employer reported $2,500 to $50,000 for the look-back period, the employer is a monthly scheduled depositor. Payment is due through EFTPS on or before the 15th of the following month. If the entity reported more than $50,000, then the entity is a semi-weekly scheduled depositor. If the payroll pay date is on a Wednesday, Thursday, or Friday, the payment is due through EFTPS on or before the following Wednesday. If the payroll pay date is on a Saturday, Sunday, Monday, or Tuesday, the payment is due through EFTPS on or before the following Friday. Now there's a couple special rules. A $2,500 rule. If accumulated taxes are less than $2,500 in a quarter, they do not have to be deposited through EFTPS if they're paid with a timely filed quarterly Form 941. The $100,000 next day rule. $100,000 or more within a deposit period must be deposited on the next banking day. Accuracy of deposits rule. An employer who inadvertently underdeposits will not be penalized if the shortfall does not exceed $100 or 2% of the amount of employment taxes required to be deposited. Deposit on banking days only. If a deposit is required to be made on a day that is not a banking day, the deposit is considered timely made if it is made by the close of the next banking day. Federal income tax voucher. The federal tax deposit is prepared and then deposited electronically through EFTPS, Electronic Federal Tax Payment System. Tax due date is determined by pay date and not by pay period. For more information on federal income taxes, retirement taxes, Medicare and Social Security, please go to the IRS website. A good source of information on their website is the IRS Publication 15, or also known as Circular E. Fictional payroll example. For our specific withholding payment examples, we will be using a fictional payroll withholding ledger that is within the Payroll 101 document. So please pull that out and keep it handy. This ledger lists all employees and their withholdings for several payrolls. Thankfully, UN keeps track of all this information for proper payment of employee and employer portions for all withholdings. We are going to use this fictional ledger to show you where the amounts come from when you choose a withholding to post and print in UAN after a payroll. It's good to know this kind of information because if there's a mistake, if you don't know where the numbers are coming from for your withholding payments, it's much harder to find. We will be talking about amounts of withholdings by appropriation account numbers, which we have not discussed in this payroll training. So for an in-depth discussion on appropriation account numbers, please refer to the UAN Fund Accounting 101, 102, and 103 training located on the UAN website. So first, we are going to talk about the Federal Tax Withholding Voucher from UAN. Displayed here is the Federal Employment Tax Voucher for payroll date February 28th. Our fictional entity has over $50,000 in tax liability and therefore is a semi-weekly IRS depositor. This payroll pay date was on a Friday. Therefore, the payment would be due to the IRS using EFTPS on or before the next Wednesday. No other reports are due with the payment on EFTPS at this time. Make sure that you have our fictional payroll ledger now to look at as we discuss what employee and employer share withholding deductions make up the amounts on the Federal Tax Withholding Voucher. A is the total employee portion of federal tax withheld, and the total is $1,083.44. This amount is equal to the columns on your payroll ledger, KK, which is $873.84, plus LL, $46.52, plus MM, which is $163.08. So the total federal tax employee share, the federal tax, which is the KK amount, the Social Security, which is the LL amount, and the Medicare, which is the MM amount. B is the total employer matching portion of Social Security, $46.52, and that is in our column LL. C is the total employer matching portion of Medicare, $163.08, which matches our column MM. D is the total employee portion for the Administrative Department trustees, and that's account number 1,110,111, and the total is $133.71. This total is made up by all of the trustees. The first trustee is Dieters, and his total withholding was $66.38. That's made up by his federal amount of $55.50, which is column KK, and his Medicare amount, $10.88 MM, plus Trustee Hankins, number 46, federal withholding was $10.88 total. She had zero withheld for federal, which is under KK, and she had $10.88 in Medicare withheld under MM, plus the final trustee, Mr. Hollins, whose federal tax total was $56.46. And this is made up by the federal income tax, $27.75 in column KK, plus $23.26 in column LL, which is Social Security, and $5.44 in MM column, which is Medicare. You might notice that those are only half of Mr. Holland's federal Social Security and Medicare. That's because this trustee is split up between the general fund and the road and bridge fund, which is 2031. So we'll see his amounts again later on. E is the total employee portion for the Administration Department Fiscal Officer. That is account number 1,110,121. Trina Martin is our fiscal officer. She's number 49, and her total federal withholdings were $7.89. Zero for federal income tax in the KK column, plus $7.89 for Medicare under MM. is the total employee portion for the administrative department other, $1,000, $110, $190. This is made up by one employee, number 43, Kotlin, whose total federal tax liability was $90.27. That's made up by the federal income tax amount of $79.62 in column KK, plus $10.65 for Medicare in column MM. G is the total employer portion for the administrative department Social Security. That's $1,000, $110, $212. And this total is $23.26. We only have one employee who contributes to Social Security, and that's actually a trustee, Mr. Hollins, number 47, and his total Social Security liability was $23.26, which you can see in column LL. And that's half of his Social Security liability because the other half is charged to 2031. H is the total employer portion for the administrative department, Medicare, $1,000, $110, $213. That total is $45.74. The total is made up of several employees' Medicare amounts. Kotlin for $10.65 in column MM, Dieters for $10.88 in column MM, Hankins for $10.88, Martin for $7.89, and Hollins for $5.44 in column MM, half of his Medicare charge. Now that's all we're going to go through right now, but you can go through the whole thing within the Payroll 101 document, and you can see what amounts make up each total on the federal tax withholding voucher. Now let's talk about the quarterly 941 report for the IRS. You know that the federal tax deposit is prepared and then deposited electronically through EFTPS, and we looked at where each amount comes from on the electronic payment voucher. So now let's look at the quarterly 941 report for the IRS. IRS Form 941, Employer's Quarterly Federal Tax Return, is used to report taxable wages subject to Social Security, Medicare tax, and federal income tax. Form 941 is no longer mailed to the entity from the IRS. You can call the IRS to request that form, or you can print the form from the IRS website. Be sure to get new forms each year because the forms have the year on them and may have been changed by the IRS from the previous year. To prepare Form 941, the total wages and compensation for the quarter must be determined. Wage payments are included in the quarter in which they are paid. For example, an employee works for the entity in a pay period ending on March 20th, but is not paid until April 5th. In this situation, the employee's wage payment is included in the second quarter when the payment is made, not the first quarter when the work was done. Most Ohio entities will not have many employees that have Social Security withheld from wages because most of these employees have retirement through Ohio Public Employees Retirement System or Ohio Police and Fire Pension Fund. Form 941 must be filed with the IRS by the last day of the month following the calendar quarter. For example, the first quarter return covering January through March is due by April 30th. If all taxes are deposited when due through EFTPS, the employer has 10 additional days after the due date to file Form 941. If the return is not filed by this date, the employer may be subject to penalties and interest in addition to the tax due on the return. Thankfully, in UAN, most of the required information for Form 941 is pulled into the report. But you should always review and compare to other UAN wage reports all of the amounts on the form to be sure that it's accurate. The Federal Tax Report and Wage-Based Summary Report are both good reports within UAN to look at for comparison. So we're going to actually look at the 941 Quarterly Report. So we're going to look at each line of the 941 form. Now you're going to need our fictional payroll ledger. Now pull that out again. Here you just have your employer information, your EIN number, the entity name and address. And here you check which quarter you are filing of the year. Okay, let's look at line number 1. Number of employees who receive wages, tips, or other compensation for the pay period, including March 12th for quarter 1, June 12th for quarter 2, September 12th for quarter 3, and December 12th for quarter 4. This is the number of employees who receive wages, tips, or other compensation for that period. UAN automatically pulls in the number of employees who had payrolls processed. Line 2, wages, tips, and other compensation. This is the total gross wages processed during the quarter. This can be verified by looking at the federal tax report under the wages subject to federal, state, and school tax column total. Line 3 is federal income tax withheld from wages, tips, and other compensation. This is the federal income tax withheld from wages that the software calculated should have been held, not necessarily what you paid. Okay, so here let's look at our fictional example from the ledger. Now let's add up all of the federal plus supplemental withholding column totals from all 7 payrolls included in the first quarter. That would be column A plus column J plus S plus BB plus KK plus TT plus CCC. And that total is $5,366.91. The UAN software pulls in the total amount the system calculated and withheld. Again, this is not necessarily what you paid, but what the system calculated and withheld from all wages during the quarter. Line 4. If no wages, tips, or other compensation are subject to Social Security or Medicare tax, you would check that box there. If not, you would leave it blank. 5A, column 1 is the total taxable Social Security wages for any employee contributing to Social Security instead of OPERS or OP&FPF. Most entities will only have a few employees contributing to Social Security. For our fictional entity, column 1, only one employee, Trustee Hollins, whose wages totaled $1,500.66 for the quarter. Then in column 2, we see that the total taxable wages from column 1 are multiplied by 0.124. That is the employee share, 0.62, and the employer's share, 0.62, of Social Security. So it's the $1,500.66 times 0.124, which equals $186.08. Line 5B, taxable Social Security tips. Well, most likely no entity is going to use this line. Next is line 5C. Column 1 is the total taxable Medicare wages. This number could be different from line 2, taxable wages, if there are any employees that have continually worked for the entity since before March 31st, 1986. If so, these employees' gross wage amounts would not be included in column 1 because they do not have Medicare taxes withheld. For our fictional entity, all employees are subject to Medicare, so column 1 equals line 2 of $66,386.04. Now column 2, this is where we multiply the taxable Medicare wages times 0.029. That's the employee share, 0.0145 and the employer's share 0.0145 of Medicare tax. And our total comes up to $1,925.20. Let's look now at line 5D, taxable wages and tips subject to additional Medicare tax withholding. Remember, we talked about this earlier. The entity must withhold a 0.9% additional Medicare tax from wages paid to an employee in excess of $200,000 in a calendar year. Additional Medicare tax is only imposed on the employee. There is no employer share of this tax. For our fictional and for most public employees, no additional Medicare tax would be withheld. Line 5E. Add column 2 from lines 5A, B, C, and 5D. Now when we add all of those together, the $186.08 and $1,925.20, our total is $2,111.28. Okay, let's look at line 5F. This line is to enter tax due from a Section 3121Q notice and demand. The IRS issues notice and demand to advise an employer of the amount of tips received by employees who failed to report or underreported tips. So most entities, again, would not use this line. Okay, let's look at line 6, total taxes before adjustments. Add amounts of line 3, 5E, and 5F. For our fictional entity, that was $5,366.91 plus $2,111.28, which equals $7,478.19. Line 7, current quarter's adjustment for fraction of cents. This line contains any difference between the total calculated amounts of Social Security and Medicare compared to what UAN system actually withheld. This usually will only contain fraction of cents due to the multiplication and rounding of the tax when computed separately for each wage record in the system. In this case, with our fictional entity, Medicare had a rounding difference of 4 cents from what the system calculated, $1,925.20, and what was withheld and paid was $1,925.16. Therefore, the 4 cents was a negative adjustment to the 941. If you have more than a fraction of cents in line 7, then you have an issue and you'll want to research it. But there are a couple possibilities. Withholding amounts for federal, Medicare, or Social Security were edited to deduct a different amount than the software calculated, and that editing would have been done in the wage area. Or a percentage was edited or modified from the set rate. For example, the percentage of Social Security or Medicare tax to be withheld was modified, causing the system to withhold a larger or smaller amount of each. Okay, line 8. Current quarter's adjustment for sick pay. This is an adjustment for sick pay for an employee's share of Social Security and Medicare taxes that were withheld by a third-party sick payer. This is for short-term disability payments. Call the IRS if you are unsure. Line 9 is the current quarter's adjustment for tips and group term life insurance. So this is for adjustments for tips and group term life insurance and any uncollected employee share of Social Security and Medicare taxes or tips. Line 10, total taxes after adjustments. This combines lines 6 through 9. For our fictional entity, we have $7,478.19 plus a negative 4 cents, which then equals $7,478.15. Line 11, total deposits for this quarter. The system pulls in the total deposits for the quarter by adding the federal withholding payments posted for each month of the quarter. For our fictional entity, the deposits were A plus C plus J plus L plus S plus T plus U plus BB plus DD plus KK plus LL plus MM plus TT plus VV plus CCC plus DDD plus EEE. And this equals $7,478.15 deposited through EFTPS. Line 12. Balance due. If line 10 is more than line 11, enter the difference here. For our fictional entity, there's no balance due. The deposits made were equal to the amount of the taxes owed. Line 13, overpayment. If line 11 is more than line 10, enter the difference here. And that would be if you had overpaid the IRS. The entity can choose to have the IRS refund the overpayment or apply it to the next quarter. Now let's look at the next page of the 941. Line 14. Tell us about your deposit schedule and tax liability for this quarter. So it's here that you want to check one of these three boxes. You would check the first box if line 10 on this return is less than $2,500. This would mean that you would send in your payment with your quarterly 941. If you check the second box, then you are a monthly scheduled depositor for the entire quarter. That means that you paid through EFTPS on a monthly schedule. And below, you would enter your tax liability for each month. You would check the last box if you were semi-weekly scheduled depositor for any part of the quarter. Line 15. This line is only used if the entity stopped paying wages. And line 16 is used only for businesses that are strictly seasonal employers. You must complete both pages of the 941 and sign the second page. Form 941 can be mailed to the IRS or can be filed online. See the IRS website for more information. If the entity has a balance due on line 12, the 941V payment voucher must be completed and sent with the payment. Balance due payments cannot be submitted through EFTPS for quarterly balances. So what happens if you discover an error on a previously filed Form 941? You would want to make the correction on Form 941X. This form is filed separately from your regular Form 941. If the entity finds an error and has overpaid the IRS, there is a 3-year limit from the date a return was due to be able to receive a refund. Quarterly 941 Schedule B. If on line 14 the entity is a semi-weekly scheduled depositor, you must complete and submit to the IRS a Schedule B. The due date for Schedule B is the same as Form 941. Schedule B lists the entity's tax liability for each day. The liability includes the federal income tax withheld from employees' wages and both employee and employer portions of Social Security and Medicare taxes. Now let's look at Schedule B. On Schedule B, you would enter the tax liability in the space that corresponds to the dates the entity paid wages to the employees, not the date the taxes were deposited using EFTPS. So displayed here is our fictional entity's first quarter Schedule B. You can see in month 1, January, there were 3 pay dates, the 3rd, the 17th, and the 31st. January 3rd's tax liabilities were $959.62, which equals the federal tax plus the employee and employer share of Medicare tax. January 17th tax liabilities were $1,009.10. Again, adding the federal tax amount of $748.86, the employee Medicare of $130.12, and the employer Medicare of $130.12. January 31st tax liability were $1,393 $1,084. This is the $962.52 for federal, the employee share of Social Security, $46.52, the employee share of Medicare, $169.14, the employer's share of Social Security, $46.52, and the employer's share of Medicare, $169.14. Now, in month 2, February, there were 2 pay dates, the 14th and the 28th. And you can see that the tax liabilities were entered in for each of those days. And month 3, March, there was also 2 pay dates, the 14th and the 28th. This is what the Schedule B looks like, and you must fill it out and send it in with your 941 report. Now, the Schedule B that you see here from UAN is for your use only. You can see that it says, not file, personal use only. So you must manually write the amounts into the Schedule B for the 941 and either mail it or you can manually fill out the amounts online. Let's be practical. We are not perfect. Yes, we make mistakes, and it's okay. Let's say it's February, and one of the maintenance guys forgets to turn in his timesheet. He's only part-time and sometimes will not work during a particular pay period, so I think nothing of it. I add all of the wage records for the employees with timesheets, post and print the payroll, and submit to the IRS the tax payment on time. The maintenance guy, when he figures out that he has no money, comes running into my office with his very late timesheet signed by his supervisor. So I post and print a warrant for him with the correct pay period dates and the current date, which is now March. Oh no, I've already submitted the federal tax payment for all of the other employees for the pay period in February and pay date in February. This employee's pay date is March. What do I do? Well, thankfully, February and March are both included on the first quarter 941 report. Should taxes all be paid in their correct month within a quarter? Certainly. But all the IRS cares about is that all of the federal taxes were withheld and paid for the taxable wages in each quarter. So I can relax and include this employee's federal tax withholdings and any employer's share on the next payment to the IRS in March. Ohio income tax. Every employer maintaining an office or transacting business within the state of Ohio and making payment of any compensation to an employee, whether resident or non-resident, must withhold Ohio income tax. The Ohio Department of Taxation identifies the entity by the Ohio Withholding Account Number assigned by the state of Ohio. All forms and correspondence must have the account number on them. As of January 1st, 2015, all employers are required to file state income tax withholding returns and remit payments online using the Ohio Business Gateway. You can find out about Ohio Business Gateway on the Ohio Department of Taxation website. Filing frequency for Ohio income tax. An employer's filing and payment frequency for the state income tax is determined each calendar year by the combined amount of the state and school district income taxes that were withheld or required to be withheld during the 12-month period ending June 30th of the preceding year. The first filing frequency is quarterly. So if the combined amounts of taxes withheld or required to be withheld was $2,000 or less during the look-back period, then quarterly tax payments are made. Quarterly payments must be remitted with Ohio Form IT 501 on Ohio Business Gateway by the last day of the month following the end of each calendar quarter. For example, first quarter is due on or before April 30th. The second pay frequency is monthly. If the combined amount of taxes that were withheld or required to be withheld was greater than $2,000, but less than $84,000 during the look-back period, then monthly payments are made by the entity. Monthly payments must be remitted with the Ohio Form IT-501 on Ohio Business Gateway within 15 days following the end of each month. For example, January is due on or before February 15th, and the final payment frequency is partial weekly. Partial weekly payments must be remitted by EFT through the Ohio Treasurer of State within 3 banking days from the end of each partial weekly period in which the employer had a payroll, if the combined amount of taxes that were withheld or required to be withheld was $84,000 or more during the look-back period. No Form IT-501 is filed with the EFT payment. Just like the IRS, there are 2 partial weekly withholding periods that consist of Saturday, Sunday, Monday, or Tuesday pay date, and the tax is due by that Friday, and the other is Wednesday, Thursday, Friday pay date, where the tax is due by the following Wednesday. And here it is, Ohio Form IT-501, which must be submitted with all payments of Ohio income taxes. There's also a form called Ohio IT-942, and any entity with a filing frequency of partial weekly must also file a quarterly Ohio Form IT-942, Ohio Employers Quarterly Reconciliation of Income Tax Withheld, for each calendar quarter. The form is due no later than the last day of the month following the end of each calendar quarter. There is no quarterly form due to Ohio for either monthly or quarterly filing frequency. Local school district income tax. Ohio law requires the entity to ask each employee for the school district in which they reside. The employee's residence is the determining factor for the employers to withhold school district income tax. An employee would only ever have one school district income tax withholding. The Ohio Department of Taxation identifies the entity by the Ohio Withholding account number assigned by the state of Ohio. All forms and correspondence must have the account number on them, just like our Ohio income tax. As of January 1st, 2015, employers are required to file school district income tax withholding returns and remit payment online using the Ohio Business Gateway, just like the Ohio income tax. Filing frequency. An employer's filing and payment frequency for school district income tax is determined each calendar year by the combined amount of state and school district income taxes that were withheld or required to be withheld during the 12-month period ending June 30th of the preceding year. The first filing frequency is quarterly. If the combined amount of taxes withheld or required to be withheld was $2,000 or less during the look-back period, then quarterly payments are made. Quarterly payments must be remitted with Ohio Form SD-101 on Ohio Business Gateway by the last day of the following end of each calendar quarter. Example, first quarter is due on or before April 30th. The second frequency is monthly. If the combined amount of taxes that were withheld or required to be withheld was greater than $2,000 during the look-back period, then monthly payments are made. Monthly payments must be remitted with the Ohio Form SD-101 on Ohio Business Gateway within 15 days following the end of each month. Example, January is due on or before February 15th. Partial weekly payments are not required for school district income tax. The local school district income tax deposit is prepared once a month for our fictional entity and includes all payrolls paid during the month. Remember that tax due date is determined by pay date and not pay period for local school district income tax. There's no employer share of the local school district income tax. It's fully employee paid and withheld from each payroll. On the SD-101 form, you must spell out each school district that you are withholding income tax for your employees. You want to list the school district number and then the total tax due for each school district. Overpayments. Overpayments made for a school district can be applied to reduce the tax due for the same district in the next pay period. But employers cannot use an overpayment to one school district to reduce the tax due for any other school district. Do not file an amended Form SD-101 return for any period. You should not show any negative figures on the report. If you show a negative figure for a school district, you are in effect applying that overpayment towards the tax that's due for another school district. You may want to keep track of these overpayments by using the School District Withholding Adjustments Worksheet found on the Ohio Department of Taxation website. If during a calendar year the entity overpays the tax due for a school district on Form SD-101 and you do not have any tax due for that same district on any of the following pay dates during the calendar year, at year end, the entity can apply on Ohio Form SD-141, the Annual Reconciliation Form, the overpayment to another school district or claim a refund of the overpayment. Ohio Business Gateway. The Ohio Business Gateway simplifies tax reporting and payments. Ohio income tax and local school district income tax reporting and payments must be filed through Ohio Business Gateway, but many other reporting forms and payments can be submitted through Ohio Business Gateway, such as the quarterly Ohio Department of Job and Family Services report and OPERS deferred compensation payments. Go to the Ohio Business Gateway for a full list of reporting and payment options. This tax is paid by residents of a city or village that has imposed a municipal income tax, as well as non-residents who work in the municipality. Remember that the fiscal officer should ask each new employee if they live in a municipality with a levied income tax, and if they know the tax rate, so that it can be withheld and paid for the employee. The Ohio Department of Taxation has a listing of municipalities that have enacted an income tax if an employee is unsure whether they have an income tax where they live. The fiscal officer must find out where the local income tax is paid and how often the tax must be paid. One income tax may be collected by the state of Ohio, another by the city of Columbus, some are collected by the local entity themselves, and others are collected by a third-party collection agency, such as Regional Income Tax Agency, or RITA. Along with the different places to pay local income tax, there will be different forms of reporting that income tax. This is why the fiscal officer must know each taxing entity and their reporting requirements. Ohio Public Employees Retirement System. OPERS is a pension annuity retirement system maintained by state government that provides retirement benefit to the employee that is comparable to the benefit provided under Social Security. In general, OPERS membership is required for all public employees, regardless of hours worked or salary earned. Employers must withhold the employee contributions and send in the withheld employee and the employer contributions on behalf of the employee, beginning with their first day of employment. The OPERS payment is prepared once a month, paying for the previous month's retirement withholdings. The payment and report are due to OPERS by the end of the following month. For example, January is due by the end of February. Remember that OPERS contribution due date is determined by pay period end date, not payment date. For example, an entity has a pay period date of 11/30 through 12/13 with a pay date of 12/18. Therefore, OPERS considers this payroll to be a December payroll because of the end date of 12/13. The payroll should be included on the December's contributions report and payment is due to OPERS by the end of January of the next year. For our fake entity, all 3 payrolls from January, the 4th, 17th, and 31st, on the payroll withholding ledger had pay period end dates in January and are included on the voucher. Our fictional entity submits the monthly contributions report and payment online through OPERS Employer Contribution System, or ECS. Find out about OPERS ECS, online payment and reporting, at the OPERS website. In the Payroll 101 document, we review where the amounts on this voucher come from. You can look over this at a later time. OPERS Report of Retirement Contributions. The fiscal officer must submit the employer payment remittance advice and the regular report of retirement contribution, one for OPERS G, Government, and one for OPERS L, Law Enforcement, along with the payment from the entity. Let's take a closer look at the monthly contributions report. Contributions for OPERS G and OPERS L are reported on separate reports of retirement contributions. You can see that our displayed report is for OPERS G. Let's discuss what is required for each contribution report. The employer's name is required here under Unit. The OPERS Employer Code, or Entity ID number. This is the employer's identification number. OPERS assigns a number to each employing unit within the entity, one for OPERS G and one for OPERS L. The last digit of the number, 0 or 8, refers to the taxable status of contributions. Post-tax contributions are submitted under an employer code ending in 0. That would be for OPERS Regular and OPERS Fringe Benefit. Pre-tax contributions are submitted under an employer code ending in 8, and that's for OPERS Salary Reduction only. Pay period end date, or month ending. For all electronic reporting through ECS, the reporting period end date is the last employee payroll end date falling within the reporting month. For example, pay period March 14 through March 27th, the reporting period end date would be March 27th. For those employers reporting on paper and mailing the report to OPERS, it will be the last day of the month, such as March 31st. All payroll periods ending in a month must be included in the report for that month. Dates must run consecutively. Don't skip weekends. Social Security number is required for each employee, and then the employee's name. Employees must be listed in alphabetical order by last name, first name, and middle initial. Full legal names should be used. The earnable salary column. An employee's total earnable salary during the payroll period covered by the report is listed here. Earnable salary was discussed in Level 3. Retirement contribution column. This is the amount deducted from the earnable salary that is to be paid to OPERS. Certification. The payroll officer must sign the paper contribution report, certifying the accuracy of all information. By virtue of ECS, electronic reports, employer certification is accepting a designated employer's login and password. Audit and payment. It's important that all reports of retirement contributions are audited for accuracy before being sent to OPERS. The online service, ECS, provides instant auditing for common errors. Reporting codes. Report codes are essential for your retirement contribution reports and are an important part of the accuracy requirement. Here's the code information that must be used, regardless of how you submit your reports. Frequency code. This shows how often each employee is paid. Be sure that the frequency code, pay period begin, and pay period end dates agree. Example, if the frequency code was 7, which is biweekly, but the pay period dates were 3/14 through 3/28, the frequency and the pay period do not agree. They do not agree because a biweekly frequency is equal to 14 days, but there are 15 days included in the pay period dates. There are 5 valid pay period frequency codes for employee records. The first is code 4. This code is for monthly, a payroll period of exactly 1 calendar month, beginning and ending on the same dates each month. The next code is code 5 for 28-day. Each payroll period must contain 4 full weeks. There will be 1 month during the year for which your report will contain 2 28-day periods because they both end in the same month. The next code is 6 for semi-monthly. 2 payroll periods each and every month, beginning and ending on the same dates each month. There are a total of 24 equal earning periods throughout the year, and each monthly report will represent exactly 1 calendar month for each employee. The most common set of dates for frequency 6 are 2 pay periods, the first beginning the 1st through the 15th of the month, and the second beginning on the 16th and ending on the last day of the month. The next code is 7 for biweekly. Each payroll period must contain exactly 14 days. The beginning and ending days of each pay period must be consistent throughout the year. If pay periods begin on a Sunday, then they must end on a Saturday. There are slightly more than 26 bi-weekly pay periods in each calendar year. 2 reports of retirement contributions each year will contain 3 bi-weekly periods because all 3 pay periods end within the same calendar month. The next code is 8 for weekly. Each payroll period must contain 7 days. The beginning and ending days must be consistent throughout the year. If pay period begins on a Sunday, they must end on Saturday and do so for each period. 4 monthly reports of retirement contributions each year will contain 5 periods because all pay periods end within the same calendar month. A report of retirement contributions is not considered accepted by OPERS until it is in the correct format set forth by OPERS, it's free of errors, and payment has been received by OPERS. OPERS pay period codes. These are called pay period beginning and pay period ending codes. Only specified pay period begin codes and pay period end codes can be used in contribution reporting. In addition, only certain combinations of these codes will be accepted. Pay period begin code. This is the first day of a pay period in which an employee worked and earned pay from which retirement contributions were withheld. Pay period end code. This is the last day of a pay period in which an employee worked and earned pay from which retirement contributions were withheld. Let's review the pay period begin codes and end codes so that you'll have an understanding of when you may need to use them on the report of retirement contributions. So let's look at these codes. The first code is E, Re-Employed Retiree. Its intended use is for an employee that is an OPERS retiree and is returning to work. The next code is H, Pay period schedule or frequency change. Employee is changing pay period schedules or frequencies under the same employer code. For example, from a monthly schedule to biweekly schedule. Code N, New Employee. The intended use for this is for an employee that is new to the entity. The next code is R, returned from non-military leave. The employee was laid off on an approved unpaid leave of absence or on workers' compensation and is now returning to work. The next code, S, new or returning seasonal employee. The intended use for this is the employee was seasonal or intermittent and is now returning under the same employer code. The pay period end code accepted here is seasonal employee leaving. This code is used for, say, lifeguards or extra park employee maintenance workers. The next code is T, return from military leave. Its intended use is that the employee is returning from military leave under the same employer code. And the final pay period begin code is X. The intended use for this code is that an employee is no longer excluded from contributing to OPERS by the manner of compensation which they are paid. Now let's look at pay period end codes. The first code is D, employee is deceased. The intended use is for when an employee dies. The next code is F, laid off. The intended use is for an employee that has been laid off but is expected to be called back to work. For example, you laid off an employee because you didn't have enough work for them to do in the park, but you expected that they would return at a later date when you had work for them to do. The next pay period end code is H, pay schedule or frequency change. The intended use here is the employee is changing pay schedules or frequencies under the same code, just like our example before, say from monthly to biweekly. The next code is L, leave of absence. Its intended use is the employee is on approved unpaid leave of absence. The next code is M, employees going on military leave. It's exactly that. Its intended use is if an employee goes on military leave. The next pay period end code is P, employee has retired. Its intended use for when an employee is retired. The next code is Q, employee has quit. And this is for an employee who has quit or one that was terminated. The next code is S, leaving seasonal employee. The intent here is for an employee that was seasonal or intermittent and is expected to return next season. The next pay period end code is W, employee leaving on workers' compensation. And its intent is exactly that they are leaving on workers' compensation. And the final pay period end code is X, exemption excluded. The employee is no longer contributing to OPERS due to being compensated in a manner that is not OPERS earnable salary. On occasion, employers will need to report both pay period begin and pay period end codes for a single employee for the same reporting period. When this situation occurs, employers should list the employee twice. The reporting periods, along with their respective codes, should appear in chronological order. For example, an employee quits and is rehired within the same pay period. Or an employee changes pay frequency within the same monthly report. Now, what do I do if I put the wrong pay period begin or pay period end code, or I forget to do it at all? No need to worry about that. ECS checks when you submit the report to be sure that the codes are accepted codes, such as a pay period begin code of S, seasonal returning, can only have a pay period end code of S, seasonal leaving. If you forgot to put a pay period end code on a monthly report for an employee, ECS provides a tool called Pay Period End Code Management. This feature lets you notify OPERS about employees who are no longer employed or to correct previously reported pay period end dates and pay period end codes. Pay period begin and end codes can only be used on a regular report of retirement contributions. not on a supplemental report. Ohio Police and Fire Pension Fund. To tell you the truth, the OP&FPF payment and reporting was one of the most frustrating things for me when I first started processing payroll. The reporting can be very confusing, and at times, communicating with the OP&FPF employer service staff can be hard if you're not speaking the same OP&FPF report language. But once you have entity information and OP&FPF employees set up correctly, the reporting takes care of itself most months. And once you and your OP&FPF employer representative get to know each other, things can go smoothly. So now we're going to go through some of the information to help you achieve this. OP&FPF members are full-time firefighters and police officers. OP&FPF cannot accept contributions for part-time employees, volunteer, temporary employees, and other safety officers that may or may not be covered by Ohio Public Employers Retirement System or Social Security. There are two groups of OP&FPF members, OP&FPF Fire and OP&FPF Police. The two groups must be reported on separate monthly contribution reports and have different rates of withholding for the employee share and the employer share. The Ohio Police and Fire Pension Fund payment is prepared once a month, paying for the previous month's retirement withholdings. The payment and report are due to OP&FPF by the end of the following month. For example, January is due by the end of February. Remember that contributions due date is determined by pay period ending date and not payment date. For example, an entity has a pay period date of 11/30 through 12/13 with a pay date of 12/18. Therefore, OP&FPF considers this payroll to be a December payroll because of the end date of 12/13. This payroll should be included on the December contributions report, and payment is due to OP&FPF by the end of January. OP&FPF Report of Retirement Deductions. The Report of Retirement Deductions itemizes key information by member, such as hours base and hours paid, earning types, pensionable gross salary, member pension contributions, work codes, and comments. Please note that not all salary is pensionable, and members may have more than one earning type per report. Employers may submit their report either on paper or electronically, but not both. Faxed reports are accepted only under certain circumstances, with approval from your OP&FPF employer services representative. All member retirement and disability calculations are based on the information captured from this report. The two main components that make up an OP&FPF member's benefit payment are service credit and pensionable salary, both obtained from the information on the Report of Retirement Deductions. Therefore, it is extremely important to submit an accurate accounting of member payroll data and the matching contributions in a timely manner. The following information must be included on the Report of Retirement Deductions that's sent to OP&FPF on a monthly basis. Employer Agreement Code. The Employer Agreement Code is a 7-character OP&FPF employer identifier and is assigned by OP&FPF. It consists of a unique 4-digit number, followed by F for fire or P for police, the employer's pay frequency code, and a single-digit number. The single-digit number is the amount of frequencies reported per month. If all members are paid at the same time every month, and the employer only sends one report to OP&FPF, then the single-digit number will be 1. If members are paid on different pay cycles, some biweekly, some monthly, then more than one report must be sent to OP&FPF. The form with the most members would have the single digit of 1, and the report with the next largest amount of members would have the single digit of 2. Besides serving as a unique identifier for each employer, the agreement code contains information about the pay frequency. Pay frequency means how often the employer pays its employees. Although the report of retirement deductions is sent to OP&FPF each month, that does not necessarily mean that every employee pay frequency is monthly. Valid pay frequencies are B for biweekly, S for semi-monthly, W for weekly, and M for monthly. The employer name is also needed on the report. The pickup type code is required in a line above each group of members within each pickup type on the report, and the pickup types can be either A, B, C, or D. Most employers will only have one pickup type, and this is always designated Type A. When employers have more than one pickup arrangement with their members, they will have more than one pickup type. All employers must report a pickup type for each member, even if they do not provide a pickup plan. This is an OP&FPF system requirement. If an employer is not sure what pickup type to use, please contact OP&FPF. The next thing required on the report is the earn begin date and earn end date information. Employers are required to submit the members' contributions on a when earned cycle, or pay period, and not when paid, or pay date. Employers reporting on paper should post their current earning dates in the header section of the Report of Retirement Deduction form. The only dates posted in the earning type detail lines of the report are earned dates that fall outside of the range of the current dates. For example, a lump sum annual bonus, earning period begin date, lump sum payments. This is the beginning date of the earning cycle or pay period. This date does not reflect when the member was paid. It reflects the time period of when the member earned the wages. Within the line details of the report, the wages are for a special payment, such as a yearly longevity payment, educational allowance, and bonuses. The beginning date should reflect the time frame in which those wages were attached to. For example, per contract, the member is entitled to $500 every calendar year for longevity paid in November of each year. The dates that would be submitted with the payment would be January 1st of that calendar year through December 31st of that year. Earning period ending date. This is the ending date of the earning cycle or pay period. This date does not reflect when the member was paid. It reflects the time period of when the member earned the wages, just like the pay period begin date. Also included on the report is the member's name. The report must be in alphabetical order by pickup plan type, A, B, C, or D. List the last name, first name, and middle initial. The member's Social Security number is also needed on the report. You should verify that all Social Security numbers are provided and are correct. Failure to provide correct Social Security numbers could cause contributions and service credit to be posted to the wrong account and create delays in payroll processing. Next, we're going to talk about the valid earning types. Earning type 0 is for regular. This includes all salary earned during the member's normally scheduled work time, including but not limited to worked holidays, shift premiums, officer in charge pay, vacation, sick leave, and comp time pay. Cash outs, payments above and beyond normally scheduled hours of accumulated sick leave, vacation leave, and comp time should not be reported, as they are not pensionable. The next earning type is 1, or holiday. Under this earning type, report pay for holidays that do not make up any portion of the member's normal schedule. Holiday pay is normally considered pensionable salary under OP&FPF reporting rules. The first question to be answered is the member scheduled to work on the holiday? Whether the member actually worked the holiday or not is only used to determine their pay amount, which is dictated by the entity's contracts, legislation, and policy, not how it should be reported on the OP&FPF report of retirement deductions. If the answer to the scheduling question is yes, the holiday pay should be included in Code 0, regular pay. Hours paid and base hours are not inflated. The amount paid simply reflects the holiday premium, which becomes part of the member's base pay. Comments should be added on the report to explain the higher than normal amount in regular area. Acceptable comments include holiday worked. However, if the holiday occurs on a member's scheduled off day, or the member is called in to work the holiday on their day off, this should be coded under Pay Code 1, holiday pay, with appropriate earn dates and paid hours. If the payment for holidays is a cash out of unused, accumulated, or banked hours, or if the employer pays these wages in annual, semi-annual payments, this is also coded under Pay Code 1, holiday pay, with the appropriate earn dates and paid hours. The dates used in these types of payments are usually annual lump sum dates. For example, if these payments are made annually every December, you would report the total hours of the holiday payout in the hours paid field and the earning dates of January 1st through December 31st. Keep in mind that banked holiday time must be paid within a year of when it's earned to be considered pensionable salary. Earning type 2, overtime. Do not report hours paid. Overtime is defined as hours worked up and above the member's normal work schedule. Report these wages under this earning type. Notice on the report, no hours are listed for earning type 2 overtime, only the amount that was paid, $133.30. Code 3, longevity. There are several different ways longevity can be reported, depending on the employer pay practices. If paid annually, you would normally report earning dates of January 1st through December 31st. However, some employers pay longevity based on the member's anniversary date of hire. For example, if a member has an anniversary date in the month of April, the employer would report dates of April 1st of the prior year through March 31st of the current year. If the longevity payment is paid monthly, the current earning period dates would apply. Earning Code 4, shift differential. Use this earning type only if paid in lump sum outside the current pay earning dates. Very few employers pay shift differential in this manner. More commonly, shift differential is paid as it is earned. In this case, it is rolled up into type 0, regular wages. Earning type 5, acting pay, officer in charge pay. Use only if paid in a lump sum outside the current pay earning dates. Very few employers pay acting pay in this manner. More commonly, acting pay is paid as it is earned. In this case, it is rolled into type 0, regular wages. If earning type 5 is used, report the earning dates but no hours. 6. Retroactive pay. Use this earning type for a wage increase only. All retroactive payments are to be reported under Earning Code 6 and are to be reported to OP&FPF within 30 days of payments to the members. No hours base or hours paid would be reported, as retroactive pay involves a monetary adjustment only. Retroactive pay is not used for wages that pertain to grievance awards for the loss of employment. The dates for retroactive pay should be lump sum dates. If a retroactive payment involves more than one calendar year, the years must be split out into multiple earning type 6s, one for each calendar year involved. Any retroactive payment that falls into the current work report should be reported within the type 0 regular wages. Earning type 7, current additional allowable salary. These are various payments that are earned in the current earning period and are not included in the member's base pay. Do not report hours paid for this earning type. Pay under this earning type includes resident pay, firearms proficiency, weapons allowance, K-9 allowance, court time, fire and EMT runs, paramedic pay, fire drills, phone duty, training pay, and extra hours at straight or base pay. Please contact an employer services specialist before reporting any payments under this earning type that are not specifically listed. 8. Lump sum additional allowable salary. This earning type is conceptually the same as type 7, with the exception that the earnings are earned outside the current pay earning dates. Report the proper earning dates for the time frame that the payment pertains to, but do not report hours paid. Earning type A, educational allowance. Educational allowances may include payments for achieving a degree, passing a certain course, or to maintain a certificate of completion. Tuition reimbursement are not pensionable and should not be reported to OP&FPF. B. Performance bonus. Do not report hours paid. These will normally be lump sum rather than current date pay. Earning type C. Sick leave incentive. Sick leave incentives, usually paid as an award for good attendance, are pensionable if the payment does not reduce the member's sick leave bank. Do not report hours paid. Report the earning dates, which should be lump sum dates. Remember that sick leave cash outs are not pensionable. This is a payout for unused accrued paid leave, not paid in the year they were accrued. Earning type D, stress or hazard pay. Do not report hours paid. Report the earning dates, which could be current or lump sum, depending on how you pay. E, special duty. Special duty assignments may include providing traffic control at special events, such as parades or sporting events. Also, DUI checkpoints. In most cases, a third party, such as a school district, will reimburse the entity for these special duty payments. However, payments for special duty are considered pensionable wages only if paid to the member directly by the employer, whether the payments are reimbursed by a third party or not. Please report the proper earning dates, which would normally be current dates. Do not report hours paid for this type. Another thing required on the report is hours base. Hours base is defined as the hour of the member's normal work schedule during the reporting period. This information is needed by OP&FPF as part of the monthly calculation of service credit. Unlike other public retirement systems, OP&FPF member service credit is calculated based on hours scheduled and paid rather than a threshold of earnings. The hours base is reported only for earning type 0, regular hours, and should not appear on any other earning entries. In the UAN software, base hours for OP&FPF employees is entered in the Employee Maintenance area on the Information tab. Normal base hours are 160 for biweekly payroll. But when there's a 3 payroll month during the year, you will need to edit the base hours to 240 hours for biweekly payroll. Hours paid. The hours paid are the amount of hours actually paid to the member to meet their base hours. These hours may include regular hours, sick time, vacation time, holiday time, and even paid comp time. The hours paid is only reported for earning type 0, regular pay, and earning type 1, holiday pay. The hours paid reported under earning type 0 is used in the calculation of the member's service credit. Do not force or change the hours paid to automatically match hours base, as these are two separate entries. If you have completed your report and the hours base and hours paid do not match on any given member, then the issue needs to be researched and corrected prior to submitting your report to OP&FPF. The discrepancy between hours base and hours paid could be the result of any of the following: earnings reported under the wrong pay code or incorrect hours paid reported, members on leave without pay, or a new or retired member starting or leaving in the middle of a reporting period. If there is not an error and the amounts do not equal, a work code, which we'll talk about here in a minute, and or comment should be included on the payroll report to explain why the numbers are different. Deduction amount. There are 3 columns to use on the report for the deducted employee contribution amount. The first is member tax deduction, or regular. If the employee contribution is deducted after taxes are calculated, the contribution amount is entered in this column. The second is member salary reduction. If the employee contribution is deducted before taxes are calculated, the contribution amount is entered in this column. To report a tax-deferred contribution, a valid pickup resolution must be on file with OP&FPF, and it must match the payroll report. The third type of deduction amount is fringe benefit employer paid. If the entity picks up or pays all or a portion of the employee's share of the retirement deduction, the contribution amount is entered in this column. Work codes. Using work codes properly on your payroll report will help eliminate phone calls from OP&FPF. If you have a member whose hours paid is less than the hours base and falls into one of the categories below, report the work code in the proper field on the report of retirement deduction. This will let the OP&FPF employer service staff know the reason the base hours and paid hours do not match. Providing dates of termination, hire, suspension, or leave will also be helpful. These dates and any other information can be inserted in the comments field on each payroll entry line. Please note, the hours base does not change just because a work code is used. For example, even though a new employee may have been paid only for 80 hours in the reporting period, the hours base reported would still be 160 for a biweekly pay period. This is because the hours pay is compared to the hours base to determine the prorated service credit. In this example, if 80 hours were used as the hours base, the employee would receive a full month of service credit, which does not accurately reflect the less than full month worked. Comments section. This section is to be used to provide more specific information related to member earnings, such as all overtime worked in current period for high overtime, or holiday worked for a worked holiday. Another example of an appropriate comment to explain higher wages would be a shift premium or officer in charge pay. You can also use this field to provide specific hire dates or termination dates where this applies. Report total. The grand total of the contributions must be posted in the appropriate box in the upper right-hand corner of the first page of the report of retirement deductions. This total must be equal to the amount reported in each column, as well as the summary of payment remittance information form. The accompanying contribution remittance check or electronic payment must match the total on the report. Signature. It is required that every paper report be signed and that OP&FPF receive an original, not a photocopy or faxed signature. This report must be signed and dated by the person of authority to submit the payroll information to OP&FPF. In the UAN software, in order to ensure that the report of retirement deductions automatically generates, you must have the following items filled out. Number 1, earnings and leave. Each earning and leave must have filled out the OP&FPF earning type. The second item is vendor payee. The OP&FPF payee must have the entity's unique 4-digit number filled out in account number 1. The third item is frequency. Each frequency must have filled out the entity's OP&FPF agreement number. If all members are paid at the same time every month and the employer only sends one report to OP&FPF, then the single-digit number will be 1. If the members are paid on different cycles and the entity has to send more than one report to OP&FPF, the form with the most members would have the single-digit 1, and the report with the next largest amount of members would have the single-digit of 2. Remember, this is assigned by OP&FPF. Call them if you are unsure about your frequency code. The next item is base hours. Each OP&FPF member must have the date that they became a member and their regular base hours filled out on the employee information screen in the employee maintenance area. That would be 160 for biweekly. And the final item is the OP&FPF pickup and frequency type. Each member must have the pickup type and frequency filled in for each earning. If you are not sure what belongs in this area, call OP&FPF for guidance. If this is not completed for each earning for fire or police employees, the monthly report will not generate. OP&FPF Summary of Payment Remittance Information. The Summary of Payment Remittance Information is used by OP&FPF to capture information about monies received from an employer. This information includes the employer code, type of payment, amount of payment, and also provides direction to OP&FPF on how to apply employer payments to the proper accounts. Rule 742-9-17 of the Ohio Administrative Code requires employers to submit this form with all payments and reports of retirement deductions. This includes all payments associated with the OP&FPF web and electronic reporting as well. In addition, employers are requested to submit the Summary of Payment Remittance Information form with all other payments made to OP&FPF, including accrued liability payments, the payment of employer contributions and penalty payments. This helps to ensure that all payments received by OP&FPF are timely and accurately processed. The following are some helpful tips for completing the Summary of Payment Remittance Information. Make sure the employer name, address, and phone number is correct. Don't forget to include the employer code. Always complete Section B for the filing type and payroll reporting type, payment type, and most importantly, the pay periods covered. All payments submitted can be summarized on one form if the pay period information is the same. For example, member contributions as well as employer contributions may be listed on the same form for the month's reporting. Please be sure to list the payments under the appropriate column for either police or fire. The total contributions submitted line should be equal to the payment sent and the report total. For paper forms, make sure to sign and date the form. Some common errors to avoid: member contributions, whether paid by the member or partially or fully paid by the employer, which is a fringe benefit, should always be listed on the member contribution line. Employer contributions should be listed on the employer contributions line, not the payroll deduction purchase line. The payroll deduction purchases line is only to be used for payments submitted when a member is buying back previously earned service credit through payroll deduction, and to be considered proper filing under the Ohio Administrative Code. A report of retirement deductions and payment must be accompanied by the completed summary of payment form. Submitting the summary of payment form with missing information will result in a notice of cure from OP&FPF. A cure notice allows the employer 30 days from the date of the notice to correct the form. By completing the summary of payment remittance and sending it with the payroll report and payment, processing will be quicker and more efficient, and this will result in enhanced service to both members and employers. Please call the OP&F Member Education Manager if you have any questions regarding this process. Ohio Department of Job and Family Services Quarterly Wage Detail Report. Employer reporting requirements. At the end of every quarter, each employer is required to file one of the following reports. Contributing employers must file the employer's wage detail report and the quarterly summary report. Nonprofit and public employers are reimbursing employers and must file the reimbursing employer's wage detail report. The appropriate filing forms are automatically mailed to registered employers at the end of each quarter. If the employer filed electronically through Ohio Business Gateway the previous quarter, the employer will receive a letter reminding them to file electronically again. Each form contains 2 reports. The top portion of the form is the wage and detail listing report, on which the employer should list individual wage data for all employees. Now remember, elected or appointed officials are not included on this report. The data should include the employee's name, Social Security number, gross wages paid, and the number of weeks that the employee performed services for the entity. The quarterly summary report is contained on the lower portion of the form and contains the gross wages paid to all employees included on the report. Both reports must be filed no later than the last day of the first month following the close of the calendar quarter for which the report is being filed. For example, January, February, March is due by April 30th. Filing online. Employers with fewer than 200 employees who have access to personal computers should report online by using either the Employer Resource Information Center on the Ohio Department of Job and Family Services website or through Ohio Business Gateway. Employers with more than 200 employees must report wage information by magnetic media. Contact the Wage Record Employer Outreach Liaison at Ohio Department of Job and Family Services for more information. Common errors in reporting. Reporting information on forms other than those approved by the ODJFS. Showing incorrect taxable wages. For example, notice employee angst. The employee's gross wages for the quarter were $11,117.37. The taxable wage amount is $9,000 because by law it is the limit that can be taxed each year. If you put the gross wage amount of $11,117.37 in taxable wages, the report would be incorrect. Another common error is leaving lines for taxable wages blank. This will require Ohio Department of Job and Family Services to determine the correct taxable wages. Incorrect reporting of qualifying weeks and wages. Omitting the certification signature on paper forms. Not reporting the state employer account number or using an invalid number. Incorrectly identifying the reporting quarter. Listing the same employees multiple times on the report. Thankfully, the UAN payroll keeps track of each employee, their gross wages, taxable wages, and generates the quarterly report. If the employee has been marked correctly in the employee setup area as full-time, the software will also keep track of the weeks worked. This concludes Level 4. In this level, we discussed practical payroll hints, common withholding payments, required payment reporting, and required quarterly reporting. This concludes Level 4. Thank you.